Welcome to the deep dive. We've gathered quite a few different sources, news reports, articles, that kind of thing, basically giving us a snapshot of the crypto scene around June 9th, 2025.
Yeah, it's an interesting mix.
And our goal here is really to, cut through the noise, unpack all this material, and figure out what the really important insights are for you right now.
Mm-hmm.
And, well, a pretty big piece of this snapshot seems to center on potential changes involving Nasdaq.
That's right. And it's interesting because you see these different layers. You've got official moves, big money stuff, and then even stories about individual traders all happening around the same time.
Okay, so let's dive into that main thread first, the Nasdaq connection.
Yeah.
It seems to kick off with an official action. Nasdaq filed a Form 8K with the SEC back on June 2nd.
Right.
For listeners maybe not as familiar, what exactly does a Form 8K tell us? What is it?
So think of an 8K like this. And it's basically a company saying, okay, listen up. Something important just happened, or it's about to, and our shareholders really need to be aware. It's a required filing for significant events, things that could affect the company or its stock price, like mergers, big leadership changes, or like this case, proposals about their products. It just signals something noteworthy is up.
Got it. And the specific proposal here in this filing, it involves changing the benchmark for the Nasdaq Crypto Index US ETF. That's ticker NCIQ.
Correct.
Now, that's the official line. But one of our sources, Inside Bitcoins, they had this kind of intriguing interpretation. They're suggesting this 8K could potentially, and I stress could, mean that specific cryptos, XRP, Solana, and Cardano might get added to the actual Nasdaq crypto index itself.
Yeah, and that's where it gets really interesting, the potential implication for those specific coins.
Right. Why is that such a big deal, being on an index?
Well, look, getting listed on any major index gives you visibility, right? But being part of a Nasdaq index, that carries a different kind of weight.
How so?
Because Nasdaq in traditional finance, it's synonymous with, big tech growth stocks. It's a major global name. So for assets like XRP, Solana, or Cardano to even be considered for a Nasdaq crypto index, it suggests this potential deepening of the connection between these digital assets and mainstream financial plumbing.
Ah, okay. Like more legitimacy in the eyes of traditional investors.
Exactly. It could boost their appeal to institutional money, make it easier to include them in regulated products like ETFs, not just crypto-only funds. It's really about integration, being part of a brand that traditional finance already knows and, frankly, trusts.
So it's not just an index, it's the Nasdaq index, carrying that specific kind of Wall Street perception. That definitely feels like it could be a significant step, yeah.
Precisely. A potential signal of maturation for those specific assets.
But our sources from that day covered more ground than just Nasdaq. They give us a wider view of the market around that time.
Absolutely. There was other stuff happening on the government side and with corporations too.
Yeah, one source pointed out that Representative Burchett proposed a U.S. strategic Bitcoin reserve bill. I mean, the very idea of the U.S. government thinking about a strategic Bitcoin reserve.
Yeah.
What does that signal?
Well, it really makes you think, doesn't it, how governments might start looking at Bitcoin down the line.
Mm-hmm.
A strategic reserve.
Mm-hmm.
That suggests they're thinking beyond just, volatile, speculative asset, maybe thinking of it more like a national asset.
Like gold or oil reserves.
Potentially, yeah. Maybe for economic stability or strategic reasons, even security. Now, look, it's just a proposal at this stage.
Sure.
But it shows that the conversation is happening, right? At high levels of government, they're talking about maybe integrating Bitcoin into national strategy somehow. That's notable.
And speaking of strategy, we also saw Michael Saylor kind of teasing another MicroStrategy Bitcoin buy. That just feels like, well, business as usual for them now, doesn't it?
It really does. MicroStrategy's strategy, just consistently stacking sats, it's become a really prominent signal of long-term corporate belief in Bitcoin as a treasury asset.
Yeah.
Saylor's tweets about their buys, they've almost become market signals themselves,
Yeah.
Just highlighting that ongoing corporate interest and buying pressure.
Okay, let's shift gears a bit. What about exchanges and market flow? Our sources mention MEXC Exchange unveiling a new launch pad featuring BTC, something about kicking off a BTC trading month.
Yeah, that kind of activity from exchanges, new products, special trading events, it signals they're still pushing, right? Trying to innovate, pull in more users, more liquidity, make trading easier.
Just keeping the infrastructure humming.
Exactly. It shows that layer of the market is constantly evolving, trying to make it easier for people to get involved.
And speaking of market flow, there was also that Pretty big whale movement mentioned. An anonymous whale shifted, what was it, 10,708 ETH?
Yeah, worth over $26 million at the time. Moved from Lido, which is a staking platform,
Right.
over to the OKX exchange.
Wow. What do you make of a move like that?
Well, these large moves, especially from staking to an exchange, they always catch your eye. We can't know the exact reason, obviously.
Right.
But often it suggests someone might be unstaking assets, maybe getting ready to sell or perhaps move into different trades, or they could just be consolidating funds on a platform they prefer.
So potential selling pressure or just repositioning?
Could be either, but it definitely underscores how much influence these big holders, these whales, still have on market dynamics. Their moves can shift liquidity and prices.
And then finally bringing it right down to the individual trader level.
Yeah.
There was that anecdote about James apparently struggling to make profits even using 40x leverage on Bitcoin
Yeah.
and taking losses.
Yeah, James's story is, well, it's a sobering reminder, isn't it, about the realities and the pretty extreme risks for individual traders.
40x leverage sounds insane.
It's incredibly high risk. I mean, think about it. A tiny 1% move against you in Bitcoin wipes out 40% of your position's value. Exactly. It can amplify gains, sure, but it magnifies losses just as fast, often devastatingly so, especially when the market's choppy. You need almost perfect timing. It really grounds the discussion in the very challenging world many individual traders operate in.
Okay, so let's try and tie this all together. Looking at this snapshot from early June, we've got this potential formal integration push with Nasdaq, maybe government thinking about strategic reserves, corporations like MicroStrategy still buying, exchanges building things, huge whale moves happening, and then the harsh reality for individuals trying high leverage trades. How do these different pieces fit? What's the bigger picture this snapshot paints for us about the crypto market, say, right now?
Well, if you connect those dots, you see this really fascinating tension, I guess.
Tension. How so?
On one hand, yeah, there's this clear momentum towards formalization, integration with traditional finance, the Nasdaq stuff, the reserve talk, MicroStrategy. These all point towards crypto, or at least parts of it, being taken more seriously, finding a place in established systems. It feels like a move towards maturity, broader acceptance.
Which is often the main story we hear, right?
Right.
Crypto growing up, going mainstream.
It is, but, and this is the key part, you see that happening right alongside the market's, inherent dynamics. It's still heavily influenced by these large, sometimes mysterious whale movements.
Right.
And you still have this very, very risky environment for individual traders using extreme leverage. The market isn't suddenly becoming smooth and predictable just because institutions are knocking on the door.
So it's not like the institutional interest cancels out the volatility. They're just coexisting.
Exactly. And I think that's the crucial insight from this snapshot. These formal structures, they're being built on top of or maybe next to a market that still runs on significant volatility. Volatility driven by big players and individual risk-taking. In fact, you could argue the institutional interest is partly drawn to that volatility and the potential for big returns, while at the same time, they're trying to figure out how to package and manage that risk for their own clients, through things like ETFs linked to indices.
So the ecosystem isn't just one thing, it's layered.
Very layered. You've got these highly structured, formal processes developing right alongside the more, let's say, chaotic, high-risk trading aspects driven by individuals and whales. They're happening in parallel.
That paints a much more nuanced picture than simply saying crypto is going mainstream. It's like it's mainstreaming while still being fundamentally crypto with all its wildness.
Precisely. Understanding that interplay, that coexistence is really key, I think. It's about seeing all the different forces shaping the market together, not just focusing on one narrative.
Okay. Well, we've definitely covered a lot of ground in this deep dive, from those potential Nasdaq index changes and government reserve ideas.
To the corporate buys, the big whale shifts, and the tough realities for individual traders.
It really shows a market that's, well, clearly evolving very dynamically.
No doubt about it. Still very much in flux.
Which sort of leaves us, and you, with a final thought to maybe chew on as you process all this information. If the crypto market is, as we've discussed, simultaneously pushing towards more formal integration with traditional finance and keeping hold of its fundamental volatility and risks driven by whales and individual speculation, what does that tension actually signify?
Yeah, good question.
Is this the market finding some kind of stable, maybe dynamic, but stable equilibrium? Or does it point to kind of inherent instability that's just part of its DNA?
Uh,
What does this unique mix tell you about where it's all heading?
that's definitely something worth pondering.
Something to think about as you continue your own deep dive into this ever-changing space. Thanks for joining us.